in this budget by the finance minister of the UK was that the government now expects the economy to grow more slowly in the upcoming years. This will eventually mean lower tax income. And despite a few goodies in this budget plan, which have to do with, home building and encouraging first-time buyers on the real estate market in the UK to, buy more and encourage them means that they will get incentives, financial incentives to buy them. There were a few things which were not in that budget report. For example, infrastructure spending. That's what many economists here would have liked to see in this budget.
All right, let's look at earnings and some of the economic data coming into the market today. Tying the German steelmaker ThyssenKrupp's negative full-year earnings story into the November strong positive manufacturing data from Germany and the Eurozone.
Well, the manufacturing data, the purchasing managers' indices which came in today came in better than expected, which underlines that the overall performance of the German economy is strong. And, I talked about the DAX before, which is not very strong today and which hasn't been very strong this week. We should not forget the German share index is still trading more than 13% higher than it was at the beginning of this year. And this reflects quite nicely the strong state that the German economy is in. ThyssenKrupp is an exception. The share price here is trading lower than at the beginning of January. ThyssenKrupp has a lot of problems with its steel section. Overcapacities in the worldwide steel production have caused a lot of problems for pricing in this sector. That's why ThyssenKrupp wants to merge its steel business with Tata Steel. But those plans are facing a lot of opposition from the workers at ThyssenKrupp, which have a lot to say there. Remember, here in Germany, workers or the unions have a strong representation on the board, on the management board of a company like ThyssenKrupp. And the problems that the management is having here with the unions are reflected in that hesitancy of investors to really invest into those shares. Many analysts think that the idea to spin off this unprofitable and very volatile steel business is the right way to go. But it will take a lot of time until ThyssenKrupp's management will really manage to make this merger work.
Right, thank you very much for those updates, Conrad. Thank you for your time and enjoy the rest of the day. In the U.S., the markets are closed today for the Thanksgiving holiday. However, on Wednesday, the Nasdaq Composite eked out a record close led by gains in Amazon. The tech-heavy index closed 0.1% higher as Amazon gained more than 1%. The Nasdaq has now posted record closes in back-to-back sessions. It also hit an intraday high on Wednesday. The S&P 500 and Dow Jones Industrial Average, meanwhile, finished lower after Federal Reserve expresses concern about the impact of the market's sharp rise on the economy in a summary of its previous meeting. The Dow declined 64.65 points. The S&P 500 fell 0.1% with financials and real estate as the worst performing sectors. In Asia, Chinese stocks fell today, although other Asian markets were mostly subdued, taking the lead from a quiet overnight session on Wall Street as investors passed through minutes from the U.S. Central Bank. The Australian ASX 200 closed flat at 5,986 points. The energy and material sub-indices led gains in the broader market after commodity prices strengthened overnight. South Korea's benchmark Kospi index edged down 0.12% after markets opened on an hour later due to a nationwide university entrance exam. Greater China markets traded lower, with Hong Kong's Hang Seng Index slipping 0.64% a day after closing above the 30,000 mark for the first time in a decade. Mainland markets were more downbeat as stocks recorded significant declines. The Shanghai Composite closed down 2.26%. Mainland China shares for more than 2%. The Shenzhen Composite lost 2.92%. And back here in Africa, South African cement maker PPC Limited has reported a 36% rise in half-year earnings, helped by a robust performance in Zimbabwe and Rwanda. PPC, the subject of takeover approaches from local rivals Afrisam, Switzerland's Lafarge and Irish building materials firm CRH, says headline earnings per share for the 6 months ended September rose to 16 cents from 14 cents. Group revenue edged up 1% to 5.2 billion rand, while core profit or earnings before interest, tax, depreciation and amortization rose by 14% to 1.2 billion rand. The company has over the years pushed deeper into the rest of Africa as profit has slumped in its domestic market. In the year to end March, it increased its cement capacity by 33% in the year to end March after commissioning its Zimbabwean mill. Rwanda's sales volumes increased by more than 30% in the period, while Zimbabwe's were up by more than 25%. And still in South Africa, the petrochemicals group Sasol has pulled the plug on all of its gas-to-liquids greenfields project, including a U.S. one in Louisiana that carried a $13 billion to $15 billion price tag. Walking away from the project, which would have been the biggest investment abroad by a South African company, underscores the headwinds the industry is facing in a volatile market with generally depressed prices. The company had previously delayed its final investment decision on the project because of low oil and gas prices. Sasol will also divest from its Canadian shale gas assets, which hit its 2016 earnings with a 9.9 billion rand impairment. The company, which pioneered the conversion of coal to fuel when South Africa was subject to sanctions under apartheid, also says it saw no need to boost its crude oil refining capacity, which currently stands at 270,000 barrels per day in South Africa. Well, we'll take a break. When we return, IMF says Zimbabwe's economic situation very difficult. To stay with us.